What's going on, good people? Welcome back to another episode of Trading My Funded Account. Today is day number 16. It's November the 1st, 2023. We made some trades today, so let's get into it. So let's talk about the important levels that we have on the chart today. We have yesterday's closing price down here at 33,135. So let's go ahead and get into trades number 1 and trades number 2. So down here, I shorted after seeing a lower high get formed at A, followed by a retest of that lower high at B, and then a break and retest of the prior higher low level over here at C. So once I had all of those things show up, that's when I went short and looked to take prices down and ride that short wave to the downside. Now, what's interesting here is the fact that this setup pretty much is a carbon copy of the exact same trade that I took yesterday from October 31st's trade review. So if you look at trades 1, 2, and 3, this was pretty much the same scenario where we had a downtrend, we had a lower high that came back to get retested, and as soon as that lower high got retested and they broke back down below a previous level of support from a prior higher low, that's when I went short on trade numbers 1, 2, and 3. Now, very similar to what happened yesterday, today I also went short right here and took 2 trades to do it. But on trade 1, I shorted right here initially, but I just got out because yesterday one of the biggest things that I learned was that you got to wait for that candle to close before you start shorting below that prior higher low, no matter how good it might look, because waiting for that candle close actually increases the chances of your trade working, because then you pretty much give yourself a better chance of ruling out the possibility of you getting caught up in a false breakout to the downside. Because a lot of times that one candle can push to the downside and make it look like they want to break that way, and then the candle closes in the green above that level and eventually hits your stop pretty soon after that. So on trade 1, I just decided to get out of it because I said, look, even though I really believe in this downtrend right now, I gotta follow my rules. If this didn't work for me yesterday, I would really be a bad trader if I came back the very next day and did the same thing and got the same results. Now, this trade wouldn't have got stopped out if I would have held on to it, but that's beside the point. Whatever my rules are, I gotta follow them. So I think I made the right decision on trade 1 and just got out. So then after I got that close that I was actually looking for on trade 2, that's when I shorted it, and then I just took it back down to the next level of support below. So after that, I just waited for the market to kind of give me a signal that really made sense. I had a higher low that popped up right here, but this goes back to what I was talking about a couple of days before when I said sometimes even though you might have a higher low, it might not be the strongest one. And this higher low is not the strongest because if you look at these 3 wicks, anytime you have a higher low that has multiple wicks across consecutive candles, that just decreases the chances of buyers coming in and actually going long right there, because these wicks represent indecision. So even though it might be a higher low, it's a very indecisive higher low, and I don't want to really get into the market in times of indecision. I want to wait until I see a setup that's just so clear and so obvious that I wouldn't be doing my job if I didn't get in. And right here, I just couldn't see that. So I said, you know what? Let me just be patient and skip that trade and wait for the best possible setup. So we ended up actually forming a triple bottom down here. Now, what I want to talk about is this large volume candle right here where prices spiked to the upside, but then pulled all the way back. And then on the next 2 candles came all the way back up, couldn't break that, but then created a lower high. And I think candles like these are important because even though this candle didn't see immediate follow through, eventually the uptrend did continue. And a lot of times in the market, especially in high volatility days like today, the market will show its hand before it actually makes the move. You just got to be willing to really pay attention to all the details so you won't miss it. Because a lot of times the market will spike one way and you'll see what the market was trying to do, but it won't be enough participants to actually create follow through. But that doesn't mean that that move is just going to get completely reversed. Sometimes it will, sometimes it won't. But in scenarios like these where the trend was already up, this is more so a signal that, hey, the buyers really want to move and they're showing you what they want to do. Now you just have to wait for your best possible setups. And when you get that, then you can participate in a move like this. So that's something interesting that I picked up on today. I just wanted to talk about real quick. And after that large spike to the upside, notice how, yeah, we did make that lower high right here, but then prices came back to establish that triple bottom that we were discussing before. After the triple bottom got formed, a higher low preceded that, And then we continued to move up, made higher low number 2, higher low number 1, higher low number 3. And higher low number 3 was very interesting because we made this higher low on top of what used to be a potential level of resistance from this prior lower high. So once we shot straight past that level and pretty much said, nah, we're not going to respect that level, that's when you knew that the buying strength was really in the market and the uptrend was definitely on. Combine that with the fact that the buyers already showed their hand on that one candle before that got made on high volume. And then you pretty much have everything you need to say, okay, the trend is up, so let me start looking for my long trades. So that's the mindset that I had as we continued on to higher low number 4 up here. So at higher low number 4, this is where it got really interesting because you see that we made an initial high of the swing at 33,300 up here, right? But notice how we pulled back and we almost created a higher low right here. Now I circled this up and drew my level of support across it anyway because I actually circled it maybe 20 seconds before the candle closed, because at one point, if you see where the top of the wick was, this candle was all the way green with a pretty decent wick at the bottom. So that's like, okay, we see what the buyers are trying to do. But what's really interesting is the fact that they closed this candle as a doji. So when it comes to the higher low strategy, when you see a doji, it depends on how you feel as a trader and what your strategy is. You can either consider a doji as a higher low, or you can not consider a doji as a higher low. It just depends on how aggressive you want to be. But just understand that a doji is a higher low technically, but I would call it a halfway higher low because it represents indecision. And the higher low strategy, one of the biggest things that leads to this strategy being successful is the fact that when you get into this trade, everybody else is getting in too, and that's what makes it work. But when you have a doji, that represents indecision. So this setup is a lot less likely to see bounce once you get to the support level if it's a doji, because nobody's really sure about whether the uptrend is going to continue from right here or not. So I just decided to skip the long entry right here because I really wasn't quite sure. But then we saw prices come back all the way down to retest the prior higher low number 3, which is good. In an uptrend, sometimes you might not just have prices stop at the first most recent higher low. They'll come back 2 higher lows below, sometimes even 3. You know, I've seen scenarios where that happens too, but today we saw 2 levels get retested. So we came back down to the level of support at D, and then we saw the higher low get formed at E. And once I saw that, that's when I went long. So if we read the notes, it says I went long here during the uptrend after seeing support at D, and then a new higher low get formed at E that pushed prices back above the first attempt at the higher low at higher low number 4. It says 1, but it's supposed to be 4. So everything right there pretty much gave me all of the indications that the uptrend was going to continue. So I got in right here at trade number 3 and just took it up to my scalp target about 23 points higher, which wasn't too far away from the initial swing highs that we established a little bit earlier. So that right there was part number 1. And when I was studying last night, pretty much the game plan that I decided on was I'm going to come in and I'm going to just see what the morning session has to offer. If the morning session is really volatile, I'll look to trade maybe 2 or 3 good trades and then get out of there. If it's not volatile and it's very stagnant, I might look for just one setup and then get out of there. So it was pretty nice today in the morning time. I was able to see a nice trend. I followed my strategy fairly well, and I was able to come out profitable for this first part in part 1. So then I was like, okay, this is pretty much like if you play basketball or any type of sport where it's a halftime, you got 2 halves, right? First half, second half. So I looked at the period in between part 1 where I stopped. I think I stopped at around 10:30. This last trade was at 10:35. So I'm like, okay, I have like a 3-hour break until 1:30. So I'm going to treat that as halftime. So I pretty much just studied, went over my trades, went over my notes, went back and looked at some previous Fed days. And then I came into the afternoon session, prepared to go, and said, look, I'm just looking for my best possible setups. If I get them, I get them. I'm already in profit, so I don't have to be too aggressive. I just need to take the best possible setups that I can find. So let's go ahead and talk about what I was able to do and the mindset that I had behind these trades. So on trade 4, we come in here at 2 o'clock. Now, what's interesting is that sometimes you don't have that big of a move when the Fed news eventually comes out. And what I've been learning about Fed days is that it's usually either going to be volatile before the news or after the news, but it usually won't be both. And today was different because this was one of those sessions where it actually turned out to be volatile in the morning and the afternoon, which means that whatever is going on in the macro environment, something is brewing. You don't really know what, but it just tells you that tomorrow, on the day after the Fed announcement, it's probably going to be a very, very, very volatile day with plenty of opportunity. And you add that in with the fact that we also have non-farm payrolls coming out on Friday. That means that the rest of this week has like an 85 to 90% chance of being super volatile, which means that opportunity will be abundant. So that's one of the things I picked up on when it comes to Fed days and the days that follow after. So on today's day, when the Fed came out and made the announcement, we didn't have too much of a big move. We had, it was a move, but I've seen bigger, especially when non-farm payrolls comes out or something like that. But needless to say, we did start seeing the price action start to kind of give indications of what they wanted to do. So right here, if you notice, if you look at points A through D, if we go back to part one, this was almost an exact carbon copy of what we saw this morning, where we had a downtrend. We had lower highs that got established. These lower highs came back to get retested and were successfully retested. And then once prices broke back down below a major level of support from a prior higher low, that's when I shorted. I did the exact same thing right here on trades 4 and trades 5. So on trades 4, I shorted here after seeing prices break and close below the prior higher low from A after 3 lower highs occurred from B, C, and D. Now, the only thing about trade number 4 was that, yes, I did wait until prices broke down below that level and closed below it, but I kind of shorted into momentum, which was interesting because the momentum wasn't really there at first. The buying momentum kind of picked up once prices got back above that support level from the higher low at A, and then they pretty much just ran all the way up to my stop. Now right there, I feel like that's a trade that I had to take, because when I did take that trade, momentum was not present and it looked like the market was about to go my way. But sometimes when the market is very volatile on days like this, you could take your best trade from your best possible levels, follow your trading plan perfectly, and still take a loss. And that's what happened to me right there on trade 4. But I didn't stress about it too much. I said, look, if I can see that level come back and get broken through again, I'll take that same short trade. And that's exactly what led me to trade number 5. So if we read the notes, it says, I took the same short trade from trade number 4 after bearish momentum pushed prices back down below A once again. And a lot of times when you have a really good entry from a really good level and you're trading in line with the trend and you get stopped out, if prices re-spike through that original entry price that you had, you just got to get back in and ride that momentum back down on, or back up, depending on which way you're going. But you got to get back in and ride that momentum. I think I talked about that on trade number 6 from yesterday. Had the same scenario where I went long right here based on a higher low, got stopped out, but then when prices spiked back up through my entry, I got back in. So that was pretty much the same mindset that I had today on trade number 5. So after 5, we established this higher low right here at E, which would come back to be very important a little bit later on. Then after that, we established higher low number 2, higher low number 3. And during this entire move, I saw what was going on. I saw that the trend was up, but I just didn't want to get into the uptrend until we finally broke above this high that we made when the news eventually came out at 2 o'clock. Because I'm saying to myself, this right here is a lower high at B. So if you draw a level of resistance across it, I'm really not trying to get long until we're above that level, and then really until we're above the highest swing high. So I was just patient. I was waiting. I was like, you know what? I only need my best trades, and that's all I'm looking for. So I don't have to jump at every single setup that pops out. So then we eventually established higher low number 4, and that's when the downtrend pretty much started to roll in. We shot all the way back down past that previous higher low, established a new lower high right here. So this is lower high number 1, and then that brought us all the way back down past the zone, all the way back to the higher low support level that was established at E a little bit earlier. Now, once we got down to this level, we pretty much kept pushing and kept pushing all the way down to F, but not exactly all the way back down to F, which was also yesterday's closing price. Remember that level from 33,135. So when it didn't get there, I said, if it hasn't gotten there, then more than likely it's trying to go back down to that level eventually. So let me find the most recent level of support. So I went back up to that higher low support level from E, and I said, okay, that's where I want to go short from, which is a good idea overall, but you still got to remember that you cannot short in front of momentum, no matter what the circumstances may be, no matter how strong you think the downtrend might be. If you see that bullish and buying momentum coming back up into the level that you want to short from, just avoid the trade. Take your trade off, look at the level and see what the reaction is going to be when prices get there. If they blow through it, you like, oh, okay, I'm glad I didn't have my order there. But if you had your order there and they blow through it, more than likely, you're not going to be able to get out of that trade before they blow through it, because they're going to blow through it with a lot of momentum very quickly, because that's how momentum likes to move: quick, fast, and in a hurry. So on 6, that's just a thorn in my side that I've been fighting for the past month and a half, maybe 2 months, which is trying to not go against momentum. And it's tough because you see your setups and you're like, oh, okay, that's my level. When prices get there, let me take it. But I think it really comes back to FOMO, because me not deleting that order before prices got there was me saying, well, if they get here and then they move back down to yesterday's closing price, I'm going to feel bad because I missed out on the move. But that's that FOMO mindset that I got to get rid of. It's no such thing as missing a move, because the market is going to give you an abundance of opportunity. If you miss this move, it's probably going to be another one coming like 10 to 15 minutes later. And on a volatile day like this, it'll probably come even quicker than that. So if you miss one, it's all good. Don't try and force a trade that's not there, and don't try and chase the market. So that's the biggest lesson I learned at trade 6, and one of the biggest things I still got to work on. So then I came back at trade 7 and I repeated trade 6 once prices got down below E again. But this goes back to what we talked about a little bit earlier and what we talked about yesterday, which is you got to remember to wait for the candle to close before you enter, because that increases the chances of that trade working for you, because then you won't get caught up in a false breakout like I did right here at trade 7. Got caught right in the false breakout to the downside and had to take that loss, which I feel like was definitely unnecessary, because I knew at that time that I needed to wait for the candle to close, but I still chose to not wait and take the trade anyway. So that's on me. You know, that's a bad decision right there on trade 6 and trade 7. And, you know, that's not really a good thing. You know, I was able to come back on trade 8 and actually make all of those profits back, which is nice. But today was a very volatile day, so I had that opportunity. But I gotta build habits that are gonna last me throughout all sessions, not just a very volatile session. So what about on other days where you take 2 bad trades like these and then you never get that move that flushes to the downside, but instead you see a trend like this that just keeps going up and continues to move higher? You would have had to take losses down here and would have been hard pressed to make those losses back on the short side if it wasn't a volatile day. So even though I'm happy about the performance that I had on these 3 trades, I still got to get this right. And I got to focus on not shorting against momentum and not getting into my position until I see that candle close. So that's very important. We talked a little bit about trade 8, but let's just go into detail a little bit more. So let's read the notes. I shorted here after prices dropped substantially below E and then came back to retest it. And then I held this back down to yesterday's closing price located at point F. So I think the difference between trades 8 compared to trade 7 and trade 6 was that not only did we have selling momentum that came back and originated from a prior higher low, that's where this zone came from. So we got rejected from a prior higher low, pushed all the way back down below E with no pullbacks. And then you can't see it on this candle, but this candle was really closer to the lows of this wick. I think it actually broke the lows of this wick down here from trade number 6. And then it came all the way back up to retest my level. So that right there is the ideal way to get into the short trade. I traded in line with the momentum as prices had already got rejected from a prior resistance level. And then I looked to take prices back down to a major level of support below. So that's the situation where this trade would work, where everything has already lined up. On trade 7 and trade 6, I had some of the signs there, but not all of the signs that told me that, yes, the short trade is active, you need to get in. So this is a great example of what happens when you wait for your actual, your confirmations to show up in the market rather than trying to jump in front of the gun. So overall, you know, I still was able to end the day in profit. This was actually My best day that I ever had in this account made 527 off of $10 points. So that's about 52 points after commissions. So that's cool. But I still got to fix up mistakes like 6 and 7 because, like I said earlier, those have been killing me over the past 2 months. And I just look back and say, wow, how much more profit could I have been in if I would stop taking trades like 6 and 7? And if we go back to yesterday, trades like 1 and 2, how much more profit could I have if I can avoid those trades? So that's really the biggest thing that I got to focus on going forward, because with the volatility that I'm expecting for these next 2 days to end out the week, it's going to be a lot of opportunity. So I can't squander that opportunity by making bad trades like I did at 6 and 7. So that's the biggest thing I want to focus on going into my back testing session tonight. And I feel like if I get those things right, I should be able to come through tomorrow and on Friday and finish the week off strong. So that's my goals for right now. But that's pretty much all I have for you guys today. I hope you learned a lot about waiting for that candle to close before you get into your trade, and also making sure that you do not get in front of momentum and try and go the opposite way against it. Trade with the market, trade with the trend, not against it, and you should like the results that you get. So I'll be back tomorrow ready to run it back again. But until then, you guys have a good one and take it easy.